Let me tell you a fun fact. Within the last 2 centuries, more than 90% of the world's millionaires have been created by investing in real estate. But if done incorrectly, without the right knowledge, required skills, or partners, it can also create a ton of problems and a lot of sleepless nights. You feel like sometimes there are way too many gurus out there trying to sell you on a weekend course, or just too much noise to cut right to the facts? Yup, we did too, and this is why we started this podcast. Our goal is to provide real estate investors, entrepreneurs, and enthusiasts with all of the most recent knowledge, secrets, tips, tricks, and tactics so that you can grow your own portfolios, increase your returns, net worth, and most importantly, create generational wealth for you and your loved ones. Remember, this is your real estate career. Information is your sword and shield, so eat hearty, prepare for battle, and grind your way to victory. My name is Tejas Gosai. I'm joined by my partner, Jeremy Moyer, and we welcome you to the Real Estate Investor MBA podcast. Hey guys, welcome back to your favorite real estate podcast. It's Real Estate Investor MBA. I have the pleasure of being your host. My name is Tejas Gosai. My partner, Jeremy Moyer, cannot make it today. He is flying to Nebraska. But we got an awesome show. Before I get into our guest, John Rubio, who is fantastic, wanted to encourage you to visit our website. It's rei.mba. We're going through a rebrand right now. And what we're adding onto our website is an opportunity to check out inventory nationally. There's a portal there that you can check out, multifamilies, all different asset classes. And then there's also off-market inventory that we have on the website. We have a new section called Market Intelligence, where we are uploading the most relevant real estate articles from across the country and locally where I practice here in the Lehigh Valley, where my commercial real estate team and our private equity fund is based. And on top of that, we have something cool called Real Estate Roadmap, where you can go to the website, sign up, and we have curated a series of videos for you to understand the beginning of owning your first multifamily, going from your first zero units to 4 units to 10 units. We have a couple examples of folks from London who during COVID went from 0 to 100 units in like a 6-month period. So these stories are really fantastic. And as you follow the roadmap, you'll see asset management, how to fundraise, how to find real estate investors to network with and invest with. If you want to do a syndication for a large project, we have some great podcasts with attorneys that are dedicated just to that one thing to help people syndicate large real estate projects. So check out the Real Estate Roadmap. It's rei.mba. And let's get into our guest. Today's guest, super exciting. We have John Rubio joining us. He is a Navy veteran as well as a very detailed real estate developer who is managing millions in commercial development. He is just a truly brilliant guy. He developed a company in 2013 called JID Investments, and that company seeks to secure high yield returns with medium risk by providing investment capital to individuals and businesses with viable real estate investment opportunities, primarily operating in the Mid-Atlantic and South Atlantic real estate markets. So something very neat about what John does is he focuses on opportunity zones. And for those of you who don't know, there are some significant federal tax benefits if you develop real estate in specific areas of the United States. Just like you can get USDA residential loan for a property that's out in the sticks, there's significant tax benefits for this one niche of investing in opportunity zones and doing it on behalf of investors, passive investors, to take advantage of tax benefits. So super great interview. Hope you enjoy it. Last plug, check out our website, rei.mba. We'll check you out next time. Cheers. Hey guys, we have John Rubio here today. John, thanks for coming to the show.
Great to be here, Tejas. Thanks for having me.
Definitely. Talk to me. You've been busy. You are doing some amazing investments. Some of our listeners may not totally understand the concepts of opportunity zone and some of these things. So definitely want to take a deep dive. If you could just brag about yourself first and tell us about, what you've done. I always like to say, share some of the big numbers. People like to be inspired for what you're doing.
Yeah. So, I mean, I've been in real estate for about 15 years, started out a little active and then primarily got into the passive side, which is what I've done now since I've had the business up and running for the last 9 years. I retired 20 years after the Navy. I was a pilot. As you can see, my plane's there on the wall, which was a blast. Had a great time. And it was a lot of fun. I had a great time and learned a ton. And started the business back in 2013 around a concept that I was kind of focused on during my time while I was still in the Navy, where I was investing passively with some very close friends who were in real estate. And I was still in the Navy. I was stationed overseas with my family at the time. But it got me into really understanding the details, the ins and outs, all of the specifics that you have to look at as a passive investor. Pro formas, offering memorandums, demographics, locations. Why are we investing here? Why this asset class? So for about 10 years, I was investing passively, getting a nice return on my money. And so when I decided to stand up the business, the focus there was to do exactly what I did as a passive investor. Bring in friends and family to start small, single family type, private money loans, but then kind of graduate to where we are now, which is raising general equity for large scale residential, commercial, mixed use real estate projects, usually around $1 million to $5 million in raise.
It's amazing. Let's get into some of that stuff. So you're super active right now. Everybody's kind of nutty about what's going on, but you've been very successful. You have a lot of experience. So talk to me about some of the recent stuff. You've had some successes.
Yeah. So the business is focused on two aspects before I get into that. One is really to partner up with the same type of folks that I was investing with as a passive investor. So very close friends that are in real estate or people that we get to meet through introductions, organic connections. And we grow a relationship with up front to get on board with them, to understand them, to make sure they're a good fit for us. They see the value we bring. And then once we bring them on board for funding, then we start looking at some of their deals. And most of the deals that these guys are doing are in multifamily, mixed use. And we're bringing those projects to our investors who we've got about 180 passive accredited high net worth individuals using self-directed IRAs, their trust, LLCs, deferred capital gains, if it's an opportunity zone investment. So we've raised a little over $33 million on 28 projects to date since our inception in April of 13. And right now we've gone full cycle on 17 of those 28 with 11 executing right now, which is wonderful.
Congratulations. Yeah.
Thank you. I appreciate it. Most of the projects we're doing are very large scale. And we're talking about total capital stack of about $40 to $100 million. We're building, 110 condos. The sponsors off running and building 110 condos with retail. Or we're doing development construction of 180 apartments, townhouses. We're doing a variety of different projects, but we're also looking at senior living, student housing, storage, industrial, anything that makes sense that we get a partner with a good sponsor that sees the value and really attracts the returns we're targeting. And they're in the asset classes and the locations we're looking to invest in. So most of the stuff we're doing is in Washington, D.C., Maryland, and Virginia, but we're also in the Southeast, down to Florida, North Carolina, South Carolina, Georgia. We're all on the East Coast there. And we've got some great projects. A lot of the projects we're investing on are considered Regulation D, 506B type projects. So what we try to do is we want to bring investors on board before they even see a deal. And the reason why we do that is because we want them to feel comfortable with us in our process. We want them to come on board and see the documents we bring forward, a private placement package, a summary of investments, all the stuff we have so that they can go through, ask us questions, maybe fly up, visit a project we have that we're investing on and get to know us. We want to make sure they're comfortable with us and the investments before they actually see a live deal. And that's my preference. I don't like to go out and bring in money when I have a deal. We've done that before, but 90, 95, 99% of the time, we want to have folks already on board, know what we do, comfortable with us, and then can come on board with us and invest with us.
To interrupt, they're mainly accredited investors. How do you?
Yeah, most of the investors we have are accredited. I'd say about 85% of the 180. We do have some sophisticated investors that are not accredited, but we still set some parameters. You know how the SEC is, they don't really define a non-accredited investor. So we kind of put some parameters in place to protect ourselves, to protect the investors. But most of the investors are accredited, high net worth individuals. And even if they are close friends and family, we still want them to be accredited because then they have option to look at both 506B and Cs. The Cs are really more in the opportunity zone world. Those are a little more risky, longer duration, bigger, scope type projects. We're doing 2 opportunity zone funds right now. One's here in DC where we raised $250,000 for a really neat project. And then we just raised $1 million for another 506C opportunity zone up in Ohio. And that's been a great project as well. So yeah, we're really enjoying it and we're having fun with that.
The pipeline of what you're doing is not easy to navigate, but you're a systems guy. Again, thank you for your service.
Thank you.
It's got to be wild because you're talking to folks, getting everything ready. It's all kind of happening at one time, right?
Yeah.
You don't really get a break.
That's right.
So talk about that. Investors, man, it's not easy to represent investors. They want to be secured. You mentioned that you have systems of letting them know what's going on. You said visiting the properties. People do that?
Oh yeah. That's one of the best parts of my job as the COO is I love when investors want to come in. They want to go out to tour a property. I want them to feel comfortable. This is a business, but it's also a team sport. We want everybody to be successful from the developer all the way to the investor. In my game, the investor's number one. They're the VIP. We make sure that they make the money that we advertise from a preferred standpoint before our company takes any money. We want them to feel really comfortable about us and our business before they participate. And the investors get to participate at a very manageable, low barrier of entry where we're raising $25,000 to $50,000 per investor pending the investment. So if we're going out and bringing in, let's say $3 million of equity to a project, I'll go out to my investors and I'll raise 100 units of investment at $30,000 a piece. That gives somebody at the $30,000 level the opportunity to invest in a $3 million project. They're a preferred Series A owner. They're part of our entity that invests into the project. And now they're sitting at the table at a $3 million raise at a $30,000 level, which is very attractive. And it attracts accredited investors that want to get their toe wet and then be able to say, okay, now I'm willing to bring in more money. Now I'm willing to do more projects with you. So that's kind of what we try to strive to do. So, and that's why it works out really, really well.
Love it. And so real estate investors, eventually the active ones do end up in the passive world. And that's like, what is it? Gold at the end of the rainbow. So you're doing these big projects in general, size wise. How do you determine what you're looking for? Is it numbers, units, location? Are there some specific parameters you have?
Yeah, that's a great question. So the top 5 that we're looking at always is, hey, what's the experience of the investor? Right? If we got an developer or sponsor that's bringing us an asset that they managed before, they've taken full cycle, they know the ins and outs of the development and the new construction. A lot of our projects are development starting out with either raw land or entitled land that shows a exit as a sale of the building or sales of condos or some sort of liquidation that starts as development, but ends when there's a finished product. But most of the sponsors or all the sponsors have to have a good level of experience in that asset class. That's number 1. Number 2 is location. Location. We really love DC, Maryland, Virginia, and the Southeast and Ohio because that's where everybody's going. That's where the populations are growing. That's where the businesses are going. That's where the big schools are. That's where the big incomes are, right? The government's not getting smaller anytime soon. So Washington, D.C. and the suburbs are going to continue to grow. We just got Amazon HQ2 3 years ago. We're only growing. We just got Lockheed Martin. We just got Raytheon, all the headquarters. So that's jobs.
Real estate just goes up. You're
right. Exactly. I was joking with I wasn't joking. I was talking to some of my friends and our property taxes are skyrocketing. And we're like, what the heck's going on? Well, because people need houses. So this area is really, really, I wouldn't say recession proof, but very recession resilient. The Carolinas. Yeah. And the Carolinas are fantastic. We love Charlotte. We like Charleston, South Carolina. We like Greenville. We like Atlanta because all the people are going there. So that's number 2 on the list. Number 3 is what's the returns? What's my risk? Our risk really is you could lose your money, right? These are unsecured, uncollateralized investments where you're coming under on a private placement as an owner, but you're not calling the shots. You're not making major decisions, right? We're giving the sponsors a lot of flexibility because they know what they're doing. And if we got to that point, we got to make sure they know what they can do. And also be able to walk through the jurisdictional permitting and the legalities to get these projects through very critical stages to get to the next milestone, right? So that's very important. The 4th is what's going on in that area? Why is it so hot? Is there a new shopping center going in? What's the competition look like? That's when we're starting to dig into a little bit of the details and the data. And then the last I would say is, what does my gut say? right? What do I feel about this project after I've kind of just looked at the tip of the iceberg? And then is it worth my time and my team's time to now dig into rental rates, appreciation, vacancy, occupancies, OPEX costs, looking at the cap rates, the land comps? That's really the last thing I'm going to say. All right, is this thing now worth a week and a half of my time and my team's time to everybody now coming together and focusing on that? And if the answer is yes, then we're game on. We're looking at the pro formas. I have a due diligence consultant that used to work at Cushman. He's in. We have a director of investor relations. My CFO is in. I'm in. The four of us are hitting it hard and we're getting ready. And then once we approve these guys for funding, we're off doing our thing. We're building our products. We're talking to our attorney and it's game on. Let's go. We're going to raise money for this deal.
I love it. Love the energy. So let's talk about some tax stuff.
Sure.
I mean, fun topic for me. I did go to law school, but I'm not a lawyer. Taxes are really important. Contracts are really important. Risk mitigation, all this fun stuff. And we're mentioning accredited investors. So taxes and the implications, and then please get into the opportunity fund stuff, because I think there's some tax stuff there. So broad question, but hit it.
I'm not going to pretend I'm a tax law expert. My CFO was my accountant. He's an enrolled agent. So one of the smart things I've done was bring him on as our CFO, because David does all the taxes for our investors. He provides all the information. He doesn't advise them or counsel them because these folks typically have their own team, but he's also always available to come on the phone with them and answer any questions. So he does all the K1s. He does all the tax returns for our investors, which is great because, you got a guy who knows this inside and out and he can talk about it. He ensures that our all of our documents, our legal documents that go out, advertise the tax incentives, the tax benefits, the tax risk, so that our investors are aware of that. And again, they have access to him free of charge 24/7. So if they have questions, hey, what about UTI? What about recapture? What about depreciation? David's available to help with that. And we meet quarterly with our sponsors and their comptrollers and their accountants so that we're constantly getting updates on, hey, how are you treating depreciation? How are you treating this? Are we going to get any ghost gains? Are we going to get rental income? So that way, into the third quarter, we're giving insights to our investors to what to prepare for and what to expect. So they're ready to go.
Love it. Brilliant. So current stuff with the whole, everybody's a little bit funny. Maybe some people are scared. Some people are tightening up. I like to proudly say that people are spending money. There's always real estate out there. There's investors that can't wait to put their money in real estate. How do you talk to these folks right now that are maybe a little bit timid and you're making all these moves and people are like, I wish I could do that?
Yeah, it's a great question. We have investors that are very well off. And, they're asking, what else can I get into? And I'm like, well, you're investing in cash flow or you're investing there. Yep. I'm like, well, great. Sit on cash right now. It's not a bad thing to have a little extra cash. If you're diversified and you're sticking to your strategy of investing and you take on the risk and you understand the ins and outs, it's great to maybe increase it a bit more, but I wouldn't be too premature and jump into things just for the sake of putting money into investments. The thing we love about us is, we're a very low barrier of entry. So you could take, let's say, $100,000 and be able to do a project or two with us and still have some capital left over to maybe diversify into something else. The fact that we have opportunity zones available now, you have the potential of liquidating gains at a very higher level, which is where I think we are now, maybe even arguably 6 months ago when the market was, to get out on some of those long-term gains type profits that you've made in the market and maybe move it into an opportunity zone. Opportunity zones are amazing. The only option you had as an investor, as a real estate investor, before opportunity zones was pretty much a DST or you had a 1031, but that was all active stuff, right? With opportunity zones, it's passive. And what's nice is the money you put in post-tax that you use to invest, that's not part of the equation. You put that back in your pocket, use it for something else. The gain is what you're really investing in an opportunity zone.
A lot of people are very afraid of that word, opportunity zone, it is complicated, but the benefits are incredible. And it's a niche, a lot of people, because it's kind of I don't want to say hairy in a negative way, it's just different.
It's different. You definitely want to get with your accountant. You want to get with your business attorney. We could share material we know about that we've addressed. There's significant compliance, but that's what the sponsors are doing. And we make sure that we're in line with that. But at the end of the day, it's a fantastic opportunity. And then going back to my original point, opportunity zone funds right now, minimum is $250,000, 500,000, a million, 2 million. Well, ours starts at 20,000. So again, we're at a very manageable entry so that, a lot of accredited investors can put up 20, 40, 60, 100,000 and have a nice investment into that vehicle and have the opportunity to invest through it.
For some folks that want to syndicate or be able to do this, we have a RegD fund and it's very complicated. I like to ask, how do people, is it a private placement memorandum that you have for each of the properties? Act like I didn't know any of this if you want to.
Sure. Yeah. So what's nice about our projects is that every project is set up as a separate entity. So we do what's called an SPV or a single purpose vehicle. So every project we invest in is going to be under a single purpose vehicle, its own LLC. You're an owner in that specific entity as a preferred Series A owner, and everything that's pertinent to your investment is for that specific investment. Now, for the qualified opportunity zone funds, we did stand up a RegD 506C fund. So we do have the option to use the fund on multiple projects, but the parameters of that fund are still foundationally set in the parent PPM. We may do a PPM, we'll do like an addendum or a subset of the primary PPM if it's a specific deal that's got maybe some different returns or the structure set up a little bit different, but the foundational PPM is set up for that. For instance, I'll give you an example. Ohio is a neat state to invest in opportunity zones for a couple of reasons. One is not only do you get all the benefits of the opportunity zone, but you also get a tax credit. So that basically means if you're an Ohio investor, you can write off income, or a resident, I should say, Ohio resident, you can write off income on your investment from that tax credit. But if you're not a resident, you can use that credit, sell to Ohio residents and get paid an income up to 10% of your invested amount. So if you brought in $250,000, you can get a check for 25 grand for someone to buy that tax credit. So that's amazing.
Wow. Yeah. Such a nuance that, you really don't get, but that's the fun part about this business, right? Like you get good at some of these niches and things like that. So crystal ball, what are you thinking for the future? And for you, just how's the next couple of years looking?
Yeah. So, we learned a ton during COVID. And COVID really helped us understand that the sponsors we were with take good care of us. And the sponsors we're with really got through that. And we got through it together as a team. So we really learned a ton. I really want to be able to have deals coming in and deals finishing and going full cycle so that we have a nice flush amount of cash coming in as well as coming out. One of my friends a couple of years back said, it's interesting. He said to me, I can go on my Juniper Square portal page, which is what we use. And I can look at my investments with your company. And then on my other computer, I'm looking at my stocks and I'm looking at my bonds and I'm looking at my investments for retirement. And I'm saying to myself, holy cow, your investment is part of my portfolio. So that's pretty neat. We like that. We want to just do it at a very comfortable pace. We're a team of 4. 3 years ago, we were a team of 2.
Nice.
And so we're hoping to grow. We want to bring on more talent, more people to be part of a team. And that's what I envision. I want a team that, maybe we have someone in every state that we're focused on. And that person is really running the show with finding developers, finding investors, finding us good opportunities. And our niche is great, Tejas. We really feel like the $1 to $5 million level is fantastic.
Yeah.
You could be an accredited investor and go and directly invest with the sponsor. What we try to do is do all that work for you, so you don't have to deal with the headaches, the diligence. We want to bring that deal to you. So
love it. Hate it that we're coming to time, though. Great interview. How do people get on you? How do people invest with you?
Thank you. Well, first and foremost, I'd love to come back anytime. So please, if your listeners are interested. Second is, we have great marketing. We have a website, redinvestments.com, a YouTube channel. This will be on there.
Yeah, everything will be in the show notes.
Yeah, LinkedIn. So you can get all of me, find my phone number. You can give me a call if you have a question about, hey, how do I get into this? How do I look at deals? We also offer educational webinars. We're going to do one in 2 weeks on it, self-directed IRAs, which we open up to both our investors and our contacts. So it's all about giving back and giving people education. And if they want to work with us, great. But if they don't, that's fine too, as long as they learn something. So that's most important.
It's amazing. Amazing what you're doing. Cheers to your success. And we'll have to have you back on. Love it. Thanks for being here, buddy.
My pleasure. Thanks, Tejas. It was a blast.
Definitely. It's Real Estate Investor MBA. Tejas, we just had John here, and check everything out in the show notes to get a hold of him. We'll check you guys out later. Cheers.